Hello, everybody. I'm Toby Shifsky, the Executive Director at Kaplan Real Estate Education, and welcome to Real Expert. Today's episode, Essential Tax Tips for Real Estate Professionals. And we got a heck of a guest today. We got none other than Paul Miller. Paul, I'm going to go ahead and bring you in. Oh, before I bring Paul all the way in, there's Paul's contact information. If you want to contact him, by all means, go ahead. He's open and available to you. I will also put the screen up at the end of the session so you can get the information then also. All right. Paul, good morning.
Hey, good morning. How are you, Toby?
You know, I'm doing pretty well. I'm excited for today because hopefully, unlike everybody else on this webinar, I have been in tax trouble before because of real estate. So,
yeah. Well, most people don't say they're excited to talk about taxes, so I appreciate your enthusiasm.
So before we get started, let me just let everybody know. So Paul is the founder and owner of Business by Design. Paul focuses on tax efficiency planning and proper business structuring. That's an important thing here. Proper business structuring specifically created to fill, kind of this gap servicing small business entrepreneurs. And if you don't think you as a real estate professional are a business entrepreneur, then you're missing it, because you are. And the other thing is, we know Paul. Paul teaches for Kaplan, while also working with over 650, I think, entrepreneurs.
Mm-hmm. Correct.
And over half of them, maybe 350 of them, Paul, are real estate related clients.
Correct. Correct. That is true. Very familiar with the real estate business and real estate industry, and really the kind of the trials and tribulations that people run through in having to run their real estate business.
Awesome. Well, you are the right guy. Now, I know we just went through tax season. I know a lot of people have probably filed for extension, but really, some people would say, gosh, you guys missed it. We should have had this 2 months ago. And I think you're going to get in, and a little bit of a secret for people is you might want to plan taxes a full year in advance. And in fact, all the time be planning for taxes. Is that right?
Yeah, and I think that for most people, they think of their taxes as like this deadline or a task. And quite frankly, if we're talking about 21, it's too late. We are already, over a quarter way into 22. You need to be planning and thinking and projecting what's going to happen this year, because there are so many things that you can do to change your end result for 22.
Got it. Paul, we're going to jump into it, but first I want to ask a poll of all of our attendees, so we kind of get a gauge of who's in here. Now, lots of times we get a lot of people who are fresh. They're in licensing courses actually right now.
Sure.
We get a lot of people who have been in business for 10 plus years, 20 years. Some of them are maybe even tax experts. They're going to help us here today, and they're going to help play along and help answer some questions. Just so everybody knows, this we expect a very high number of people, and we do. We have a lot of people on this webinar. It's a super popular topic. We're going to have a moderated chat, so please send your chat questions in. Michelle Oje, who's our producer, will be basically filtering some of those chat questions up to Paul and I. Otherwise, guys, they just roll by really fast. But please submit your questions, your chat questions, and we will see the ones with the kind of boil up to the top, and we're going to take our time to try to answer it. This is going to go fast. Paul, like you said, this is something you probably plan for all year. It's not something that can be covered in just 30 minutes, but I think we're going to give some golden nuggets to not only new people, but people who've been in the business for a while. And so Let me just ask this poll question of everybody, because we want to know who's here. And this really has to do with, how long have you been in this business? And so the very first poll question I'm going to ask is very clear. How long have you been in the real estate business? Go ahead. These are all anonymous, everybody. Nobody's going to see your name on this. It doesn't work like that. It's all anonymous. So take a couple seconds, fire it in. Look at this, 10 plus years. We get a lot of people, 10 plus years.
Yeah.
Good for you. Always learning. One thing I've always appreciated is those agents who continue to learn, keep themselves current, continue to polish their business. Look at 5 to 10 years. Those people, we call those growth agents. Boy, you're just in that sweet spot. 0 to 4 years, we got a bunch of people, and we do have a pretty high percentage of people in I'm not even licensed yet. Look at this, Paul. This is going to be fun. So I'm going to share the results. I will always share the results with you guys. So here's the results. Look at this. Who's in this webinar today? 23%, 10 plus years. Good for you.
Yeah.
5 to 10 years. Look at that, about 12%. And Paul, are you ready for it? Look at this, 43%.
Yeah,
That's awesome.
Great.
If you're here and you're not even licensed yet, you are not gonna make the same mistakes I did when I got into business. So, all right, let's go ahead. We're gonna jump in real quick. So, Paul,
yes,
since we start off, we kind of know who's sitting here. Let me just start with the big one. What is generally the biggest concern among real estate professionals, when it comes to their taxes? What is their biggest concern?
Well, and just kind of going off the poll here, I'm just divided in two. There's people who are just getting involved in being self-employed. They maybe are afraid they don't know yet what they don't know. But I'll speak from experience. And most people that are in real estate, the number one thing is that they're concerned about is, how do I pay less tax? That is like the big focus for people, is always like, oh my gosh, what do I need to do to lower my tax liability? And I think, Toby, we need to shift that thinking a little bit. You have to remember, you're a business owner and entrepreneur. Your tax situation, if you are going to be self-employed, Schedule C, self-employed 1099, it's a perpetual thing. It's going to be ongoing. And so I think sometimes we need to refocus our attention towards not just, of course, we want to pay less tax, but really, what do I need to do to run my business better? And I think understanding and equipping the tools you have available to run your business better is the focus that people should take, either initially or even when they've been in business a long time.
Got it. Let me do this, Paul. I got it. We're going to start with a couple quick polls. I want people kind of engaged right off the bat, so we don't miss anything. And we just kind of gave up an answer to kind of the first big poll here, but I'm going to go ahead. Everybody want to play along. So what? Look at this. I even spelled what wrong. That's just to get your attention. What is the biggest concern that real estate professionals have when it comes to their taxes? You just heard Paul say something here. Now, what do you think it is? What is my tax liability? How do I pay less in taxes? What if I don't have the money to pay taxes? That was the boat I'm in. I'll even show you.
I told you, everyone wants to know, how do I pay less in tax? That's always the magic question, and which is fair. But there's mechanics that go into getting to that point, though, too.
So I'm going to go ahead and close this poll. Everybody getting 5, 4, 3, 2, 1. I think this is interesting because I think what you find out here is they're kind of all important, but which one do most people ask, right? How do I pay less? As you get into the business, and all of a sudden you start having to prepare and plan to pay these taxes, you start to realize kind of, for me, one of the biggest transition was going from a W-2, being employed and having my employer paying part of my taxes, to me paying all of it. And I'm like, wait a second. This now became the biggest expense of my life, was paying my taxes. And so look at this. I think I just shared the result. We got one brave soul. How about this? How long will it take the IRS to catch up to me?
Yeah.
Oh, all right. So let's go back here. And I just want to make sure we hit on this, because this biggest concern, like you said, is how do I pay less? And isn't that, now some people would think, oh, that's unpatriotic, that's but there are rules set up, and these are very advanced tax rules. I mean, there are piles and piles of rules. Mm-hmm. What would you say to somebody? I mean, should they feel bad about saving money on their taxes or planning to save money on their taxes?
Well, let me just explain it this way. This is how I try to explain it to clients. A byproduct of good planning is that you will pay less in tax. Okay, so planning and being really direct and controlled with your end result, you're choosing the way you spend your money. The way our tax system is set up, if I make profit and I want to hold on to that profit, there's a penalty. It's called tax. If I decide to take my profit and spend it on other stuff, there isn't a penalty. Okay, the tax system is set up to incentivize us to spend, not necessarily always save. So you just have to be able to understand kind of the rules of the game. And as you're talking about that, Toby, I just think of it like, it's like learning a new language. I think when people get involved in real estate, they learn about all the transactional things, all the legal stuff they need to do, work with clients. And then it's like a hidden secret. Like, by the way, you're self-employed. Good luck. They're thrown into this mix of things, and all of a sudden they become very overwhelmed. And I think you just have to be able to understand that element. You just have to learn a little bit different language. It's not terribly difficult, but you've got to be able to do that and learn a different muscle memory.
Got it. Well, I think that what this comes down to is if you're really going to be planning and you're really going to understand, the government actually wants you to spend money, and it's not going to penalize you to spend money. As a matter of fact, you might see it as a benefit to spend money.
Right.
Because that's really it. It's about it. We're a consumer economy, right? And so there are some incentives. Here's the thing I think that people get tripped up on is what is pre-tax and post-tax dollars?
Yeah,
can you give us an idea of what that concept is and why it should be important to everybody on this call? I don't care if you've been in business 10 years or you've been in the business, you're not even in the business yet. Why is it important?
So, a lot of times people ask questions, what's deductible, what's not, or whatever. I say, if you get one thing out of this event today, it's just to learn the gravity and the difference between pre-tax and post-tax, okay? And the term is your marginal tax rate. And I like to give this example because I think it's relevant. I think people can add context to this for themselves. So I'm married. I have 3 young girls. My wife and I say we leave our home. We stop at the gas station at the same time. And let's just say gas, the sign says it's $4 a gallon. I leave my home office to go to my other office in Edina. It says $4. I can earn $4 and buy 1 gallon of gasoline. The other sign above my wife's car is incorrect. It says 4, but it really should say more like $6.75. Okay, because we have to earn $6.75 to buy 1 gallon of gasoline. That's non-deductible. See, everything that's non-deductible has a higher cost to it. That's the deception that happens in taxes. And just to add that point further, most people's goals in life, if we boil it down to why are you doing what you're doing? We're trying to make some side money, trying to build some profit, trying to build what we call post-tax net worth. So I want to save money, reduce debt, put my kids through school. We want to remodel our house, want to maybe make an investment into a property, whatever. All those types of things that people have are non-deductible. So the challenge is, in order to get this amount of money, I have to make this much profit. It's deceptive.
Got it.
And I don't think that people realize how quickly taxes have such an impact of what they need to do to create their net worth.
Got it. It's huge, right? It's on everything.
Yeah, it's huge.
I loved your example that when you're paying for the gas at the pump at $4 a gallon, that's a lot. $4 a gallon is a lot.
Yeah.
But it ain't as much as your wife who isn't working within a business, right? So can't use the deduction of the gas and the expense in the car. And so it's costing her truly, you have to earn what was it again? Six?
Well, for us, it's like $6.75. Just to give you another quick example, I talked to someone yesterday on this. Copays, right? Who hasn't paid a copay out of their pocket? So I go and say, hey, it's $100 copay. I'll just pay it out of my pocket. I'm not going to pay it through an HSA or something like that. $100 copay, if you haven't written it off or paid through a deductible plan, for most people, it's like $150 and $170 because you have to make that amount of money to get $100 post-tax. So taxes, I say the biggest thing for most people when they learn this about taxes, it's deception because everything gets diluted down to a lower number. And I feel like when real estate agents, the main thing they really want to know is when I deposit a check, how much is mine and how much is already spoken for. That is the mystery that surrounds so many people. And that is why they fall behind in tax. That's why they don't have a proper budget. They don't understand, geez, I deposit a check for $5,000 as a commission. Great. How much of that is mine? What can I really spend?
So this gets me to our next poll question, which I think was mistakes, right? Like when I'm thinking about a real estate professional, in fact, let's do this. I'm going to ask a poll question, everybody. Sure. I'm going to ask you, what are the top 3 mistakes regarding taxes made with real estate professionals? All right. So everybody, you're going to get a chance to play along, and we're going to try to understand what these top 3 mistakes are that real estate professionals make. And go ahead and answer, what do you think there are? Actually, I've cut it down because of time. We're going to go to 2 mistakes. And you can answer more than one. So this is a variable. You can answer more than one. So pick your top 2, everybody. What do you think the top 2 mistakes are regarding taxes made with real estate professionals? Look at it. We got poor bookkeeping. We got thinking of doing your taxes as a task. We got not getting enough professional help when you need it. How about not budgeting money to pay taxes? Like Paul just said, right? I get a $5,000 commission check. How much of that is mine? How do you do that math? Or not paying your taxes when they are due. There's another mistake. All right, let's do this. We're going to have, in 5 seconds, I'm going to end this poll. Take a good read through them. Pick your top 2, everybody. Look at this, Paul. There's going to be an interesting result here.
Yeah.
All right. 4.
I see it.
Do you see it?
Yeah.
Sometimes people, they just don't listen, but that's okay. Or that's what they're here for. All right. And we're going to go ahead and end it, everybody. Look at this. Let's share these results. Poor bookkeeping and not budgeting the money to pay the taxes were our attendees' top 2 picks. Let me ask you, Paul, as a professional, what do you think your top 2 picks are on here?
Well, I would just say it's an alignment of that. And one of them I just talked about as far as like when I deposit a check, what do I need to escrow? So that budgeting thing, Toby, falls into, here's what usually happens. Someone makes money, let's just say in 21, and we just had our tax deadline. They go, oh, crap, I owe tax. Okay, now what? Now I'm making money in 22 to pay 21's taxes. So meanwhile, I still owe money for 22. So you don't want to get into this situation where you're using current year money to pay prior year's liabilities. That is the budgeting aspect of that. Very common. Now there's an easier way out of that, but it is a very common mistake. You shouldn't feel bad about that because it happens to just about everyone. And then the other one was the bookkeeping, just having some semblance, a good set of records. If you did any one thing, just start using one bank account, one credit card for what I call your walking around transactions. The more credit cards you use, the more bank statements you use, the more work you're putting on yourself to assemble information.
Yeah.
And I think just centralizing and focusing and being able to look and say like, hey, I'm disciplined with the steps I take and how I do my bookkeeping really will help you have a better handle of what your true profit is and then how to budget for your tax.
Excellent advice. Love that. Make it simple. Force yourself to have one record you have to track, that one credit card. That's smart. Easy. I wish somebody would have given me that advice. Look, I think we've had a couple of people ask us just for a quick hitter, like, is there a certain tax or bookkeeping program that people could look at that you would say, yeah, that's pretty good? I mean, I know you're not working for any of those.
Yeah.
But any of them that you would
There's tons of apps out there. Most people, I would say the gorilla in the industry is probably just a version of QuickBooks. I mean, QuickBooks Online is typically going to be what most people would want. I think there's small investments in some of these things to your business that's going to make a difference. So many things now, if you use like QuickBooks, most of our clients use QuickBooks, it'll sync to your bank statement. You'll have your transactions and it'll start categorizing stuff. You can upload receipts. It's very intuitive that way. The other one I would say also to throw out there, I typically use MileIQ to track mileage. Auto expenses are the number one, usually the biggest percentage expense item for people in real estate. So you need to track your miles, and an app that do that. I use MileIQ. It's worked great. I've used it for about 7 years for now.
Yeah. So mileage, right? Number one. So I got a bunch of veterans in here. Then they're all like, yeah, keep track of your mileage. If you're not writing off your mileage for work, you are missing. I think, might end up being the biggest single deduction for the business. Generally in real estate, if you're doing a lot of driving around. I know that COVID may have slowed down some of that, but let me ask you, if I had to buy a professional platform to meet with clients, I'm sure I would be writing off my Zoom charges or my whatever my costs.
Absolutely. Absolutely. Internet costs, you've got your whatever web teleconference devices you have. You're talking about auto. Another one is if you have a spouse or someone else in your household that helps you with the business, those miles count. You've got to be able to have a good conversation around what is really in business. And I'll speak in the context of myself as an entrepreneur and for anyone who maybe works this more full-time. I know some people may be part-time. But I think of someone as an entrepreneur. When I get up in the morning until when I go to bed, I'm working. There isn't like a clock I'm punching. So a lot of times for people, it's about conditioning their mindset to understand this is my hat as a business owner. This is my hat personally. How to make that separation. And there's some exercises you want to go through to make sure you're clear about what is deductible.
Got it. And getting guidance from a professional, which I think we're going to talk about in a little bit, is keenly important in that sense. We have people saying, when should I engage a CPA? Some people, well, when do I need an accountant? When do I need? And I think from the very get-go we started today, Paul, you said, don't treat doing your taxes as an event. It needs to be a mindset. It's something you're always managing. Is that right?
Right. And I think it's, there's like anything, in a service-based business, we were talking a little bit offline, and I was just saying, if you want one website to go to that has every piece of information you want, I have it for you. Should I share it?
Yeah.
It's Google.
Google
it. There's no barrier to information that's out there. The question is, someone has to help you filter through all the noise and what is really relevant to you. And that's what working with someone as a professional. Now, I'll also qualify that in the world of tax and accounting, you're going to find two different types of people. You're going to find people that are task oriented, that are just there to complete a tax return and assemble something for a due date. The flip side is really someone that would be a little bit more on the advisory side. That is a little bit more about sharing business knowledge and experience. Now, which one do you think costs more? Of course, you have to pay for the knowledge, but that is a multiple as a rate of return. It's a great investment into your business to learn about the mechanics, because the number one thing I hate to see is people that are inefficient with their taxes. I see people all the time way overpaying their taxes just because no one told them. No one told them to do something a little bit different.
I'm that guy. So, or I thought I was doing it right. I like to think I'm fairly, smart, and I wasn't as smart as I thought I was. And so I got into real estate. I did really well right off the start. I mean, tons of transactions, and I was the guy that got behind. I had spent the money one year, and the tax bill became due, and I couldn't catch up. And then my business kept taking off, and I'd like, I'll get it on the next deal. I'll be able to pay it on the next deal. And literally, then I did a land development deal that had some really complicated profit recognition taxes involved. And I was still trying to do my own stuff. And well, needless to say, 2 years later, and lots of really fun conversations with an attorney in the IRS, I wrote a check for $86,000.
Wow. Yeah.
And I was like, oh.
You know what I call that, though? That's a price of an education. We all pay different prices for education. There's some formal education, and then there's informal like that. And but those experiences are what shape you, and I think that it's just important to know also, when you're in business, your time is the only asset you have. And so when you're allocating your time, the more disciplined you can be with your time, the more you can outsource things that it's not worth your time to go learn all this stuff. It wasn't worth your time to go learn all the elements about how you do a land development, et cetera. It was better worth your time to do the deal.
Yeah.
And so I think that we have to get out of a scarcity mindset and more into a mindset of saying, hey, I need to reinvest into a business. And that is really where we see people often take off when it comes to their profitability.
Right. They do the stuff they do well that's going to drive more business and then outsource, essentially, right? Those other bits, which is where somebody like you comes in, right? Who works with entrepreneurs that says, listen, I can take care of this thinking, that you can go to Google and you can research everything, but I'll tell you, I know how to apply it, right? Yeah. And this is the advice, I think, for all of our kind of fresh people, and people even when you're in the business, real estate business, but I think you'll recognize, and some of our people have been in the business 5 years, 10 years, you get to kind of these plateaus, and in order to transcend and go to that next level, you generally need help. You need more bodies, you need more professional guidance. And so some of those levels are really easy. For those people just starting out, find some guidance early. Don't wait till it's too late. Don't wait till your taxes are due. And I see this. I have people asking us questions like, should I be an S Corp? Should I be an LLC? Should I, all these things. I think those are questions for their professional, right?
And so I just want to add, when in the world you're going to go out there and talk to people, specifically about taxes, people say, I need to find an accountant. And I'd kind of say, no, you don't. You need to find someone that's going to help you run your business first. Mm-hmm. They're two very different things. In the industry that I work in, and I've trained over 1,000 accounting firms, and most accountants don't understand that what they deliver might be a tax return. But if you came to me and said, Paul, can you help me with my taxes? And I give you a tax return, you as a customer think you bought my brain, and I'm going to tell you everything about that return. No, you just bought a transaction. You need to engage differently with someone to start a conversation more about a relationship, not so much a transaction.
Excellent advice. So let me do this. I think we got about 4 minutes left, and there are some ginormous tax advantages available to just the people listening to this webinar.
Right.
Those real estate professionals. Can you expand on that? Can you let us know? Because this is a tax advantage that everybody should be doing in real estate if you qualify. Take us through it, Paul, will you?
Well, you all as real estate agents and the real estate industry have great lobbyists, because there's laws set aside specifically for you. So to add context to this, so the average person out there, if they were to get involved in, let's say, buy rental property, investment property, there's going to be limitations. We're called passive loss limitations. Now, real estate agents, or someone who's what's defined as a real estate professional, and that real estate professional very quickly is 750 hours, more than 50% of services performed in real property trades or business, has a different set of rules. So people that go out and generate profit with their real estate commission business, one of the great offsets is to be able to go out and build a real estate portfolio with them, because they can use depreciation, they can use losses to offset the two. Generally speaking, normal people are going to be limited or will be kicked out of that because there's a very low income threshold. So as a real estate agent, you have a tremendous opportunity to do that. Now, I want to be clear about something we had mentioned. There's a condition is 750 hours, which is about 15 hours a week.
Yeah.
Now, I think
isn't a full work year is like 2,000?
About 2,000, correct. Yeah, 2,000 hours. And then there's a 50% of services. So let's say I'm only in real estate part-time, and I'm working maybe just on the weekends even, and I'm working 40 hours a week in another job. That means I have to work 41 hours a week, though, in real estate. So
not only do I have to do 750 hours, I also have to do more hours in real estate than my full-time
regular job. It's an and. It's not an or, it's an and for that.
You got to do both. So it's a double qualifier. Okay.
That's correct. And so the tremendous opportunity, though, is there when you meet that requirement, which is quite honestly, it's fairly easy for people involved in real estate, especially if you want to build a real estate portfolio to do this. There's some tremendous benefits. And the tax laws, specifically from the tax reform in 2018, changed a bunch of things to even make it more attractive for people to invest in real estate and buy appreciating assets like that. So we have a lot of our real estate clients have a portfolio of property, investment property as well. And that's part of how they balance out their taxes.
So if I'm an agent, now this is important. So this is these people who've even been in business 10 years plus that you haven't started doing this, right? You're missing it. For those who are coming in fresh, you got to be looking at, you're an expert. I mean, you know how many times I got asked to invest money in the stock market and all these different, and every time I invest, it seemed like I was a little late to the game and everybody else made money and I didn't. Until I turned around and said, why don't I invest in something I'm an expert at, which is real estate. I know what values are good and which values are poor, and where an area is maybe rejuvenating and appreciating quickly. And this is this really cool part, which is I can take my real estate business and let's say I made $100,000 of profit in a year doing my real estate business, and I'm going to get taxed on that, right?
Right.
And because I didn't spend it, and now I got profit, and I'm gonna get taxed on that. But if I have a rental property that, if everybody understands maybe a concept of depreciation, the value of that property can be depreciated over a period of time. You have expenses that go into maintaining that property, right? And caring for and all those kind of things. And so what you can do is you can take any losses from that rental, right? Which actually, your property can break even and still have losses.
Right. You could have a cash profit, cash profit, and it would show a tax loss, quite frankly.
And it would show a tax loss. Well, you can take that tax loss of $5,000 against your $100,000 worth of profit. So now you're only taxed on what, $95,000 worth of, And if you stack up 8, 9, 10 properties over time, that's a great balance. I mean, it starts to really, once again, government wants you to spend money, right? So just go spend your money, buy an investment, something build yourself a retirement appreciating asset that actually can positive cash flow, and yet reduce your tax liability. That's fantastic.
Yeah.
And only for real estate agents. You can thank the Realtors Association for that. True.
Absolutely.
And they fight to protect it all the time.
100%. Yep.
You know what? We are at about the end of the time. I know we got some other questions here from people that have questions. I tell you what, guys, if you want, you can connect with Paul after the presentation. Paul, I wanted to thank you for being here for Real Expert, and welcome. I look forward to seeing you in class at Kaplan. Thank you so much for being here.
You're welcome. Thank you. It was a pleasure being here. Thank you.
Absolutely. Well, thanks, everybody. That wraps up this episode of Real Expert. And once again, I'm going to put the closing screen on, and there is Paul's information. You can feel free to take that down and contact him if you'd like. But thank you again, and take care.
Okay, bye-bye.